global equities are bleeding as China imposes new retaliatory tariffs. U.S. stocks closed higher on Friday for the first time in 5 days on renewed optimism that an all-out trade war can be averted, even after the U.S. decision to slap fresh tariffs on Chinese goods overnight. The market fell sharply in the early going after the U.S. raised tariffs on $200 billion worth of Chinese goods after negotiators failed to reach a deal. Hours later, market remarks from Trump and Treasury Secretary Steven Mnuchin gave investors reason for optimism. In particular, Mnuchin said that the talks had been constructive, while Trump suggested that the tariffs could be removed and that the trade talks will continue. The S&P 500 index rose 10 points, or 0.4%, to 2,881 by closing time. The Dow Jones Industrial Average gained 116 points, or 0.5%, to 25,944. The technology-heavy Nasdaq rose 6 points, or 0.1%, to 7,916 after having been down as much as 1.9% earlier. However, the risk sentiment turned sour on Monday again as Asian equities fell after trade talks between the U.S. and China wrapped up Friday without an agreement. Shares dropped 1.2% in Shanghai to 2,903.71. Japan's Nikkei 225 index lost 0.7% to 21,191.28. The S&P ASX 200 declined 0.2% to 6,297.60. South Korea's Kospi fell 1.4% to 2,079.01. And Hong Kong's markets were closed for a holiday. Risk aversions intensified after China imposed new retaliatory tariffs on $60 billion worth of U.S. goods, days after the Trump administration said it would impose higher tariffs on $200 billion in Chinese goods. China's latest tariffs will take effect on June 1st, adding up to 25% to the cost of U.S. goods that are covered by the new policy from China's State Council Customs Tariff Commission. Despite the retaliation having been expected, the selling pressure on stocks increased. As such, European equities finished sharply lower on Monday as the pan-European stocks 600 closed provisionally down 1.2%. Germany's DAX dropped 1.5%, while French shares fell 1.2%. London-traded stocks fell to a 2-month closing low, down 0.6%. Stocks of tariff-exposed automakers and their suppliers dived 2.7%, as all stocks on the sector index fell as well. U.S. stocks dropped on Monday as well after a series of escalations in the U.S.-China trade war. The Dow lost nearly 700 points, or almost 2.7%. The S&P 500 lost 2.5%, while the tech-heavy Nasdaq Composite lost 3.5%. As for individual stocks, Apple had its biggest drop of the year, falling 6.1% to about $185. Seagate lost 7% to $44 a share. Caterpillar, the heavy machinery manufacturer, lost more than 5%, dropping to around $124. In currency markets, the dollar turned positive on the day after the initial drop against the European currencies, while suffering further losses against the Japanese yen. The currency has taken full advantage of rising tensions between the U.S. and China and has gained 0.8% on Monday and has climbed 2.6% in May as risk appetite has sagged. The escalation in tensions has shelved a meeting between President Donald Trump and Chinese President Xi, but the two leaders could meet at the G20 summit in Japan in June. The U.S. dollar-Japanese yen plunged to more than 3-month lows at 109.00 and has settled marginally above the psychological level later in the day. As the trade crisis between the U.S. and China deepened after China retaliated on U.S. tariffs hike on Friday, the yen could gain further should the tensions continue to escalate. The euro-US dollar could struggle to overcome the 1.1263 level and turn red in the daily charts. However, the euro failed quite well with risk aversion-related headlines. On Tuesday, Germany will release the April wholesale price index and CPI updates for the same month. The country will also release the ZEW survey on economic sentiment, while the EU will publish March industrial production. Should the numbers disappoint and show further weakness in the regional economy, the common currency could go lower and challenge the 1.12 psychological support. Further risk aversion may add to the potential negative pressure on the euro. In commodities, oil prices turned sharply lower after the initial rise to the $72.50 area. Brent gave up earlier gains that followed apparent attacks on Saudi crude tankers as steep declines in the U.S. stock market fed an aversion to riskier assets, which include oil. Earlier, the market was supported by the reports by Saudi oil minister Khalid al-Falih, who said that there was significant damage to the two tankers as those vessels tried to cross into the Persian Gulf. The Saudi incident comes days after the U.S. said that it would send an aircraft carrier and bombers over what the administration of President Donald Trump had described as an increased threat from Iran. However, as riskier assets fell Monday on renewed trade tensions after the U.S. and China failed to reach a trade deal on Friday, oil markets struggled to resist a widespread selling pressure. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.